Hey guys, welcome back. I hope you had a really great day trading today. Or if you were like me, I hope you had a really great day on the sidelines. The markets were very choppy today and pretty directionless. And I didn't even put one trade in today. Today was Monday, August 12th, and markets are bracing for inflation data. We do have PPI tomorrow in pre-market, and we also have CPI on Wednesday. And with today's price action, you would have no idea that we had VIX at 65 just 1 week ago. Last Monday, VIX spiked to 65, and we did see a few days of volatility, and then the VIX got absolutely crushed from 65 down to 20 today. And SPY did open slightly up, and then we dropped within that first 30-minute candle, and then that second 30-minute candle we were swinging back up, and then we came back down to close flat. So we didn't disturb any levels on the chart. Below us we had the 35 EMA and the 4-hour 200 moving average, and above us we had the 30-minute 200 moving average and this island top. And we stayed out of everything's way. We just traded sideways right in the middle of all of that, and we didn't disturb anything. And same thing over in SPX. We did open slightly up and then dropped right away. Came back up into the green just short of where this island top is, and we came back down, and we did end up closing completely flat here, 0.00%. So from where we closed last Friday to where we closed today, we didn't go anywhere at all, completely flat. So SPY closed up 0.05%, SPX closed flat 0.00%, VIX closed up 1.77%, and we did stay within the implied move in both SPY and SPX. So when I go over tomorrow's trading ranges, things are going to look very similar since we didn't really go anywhere, but the trading range will be just a little bit wider because VIX did go up 1.77%. So that was the S&P. Let's switch over to QQQ. We did open flat here and then drop. Then we popped up to this down gap right here. This is the down gap from right after Amazon earnings, where Amazon guided lower, and you could see that we did get right into that gap just a little bit. You can only see that little wick there, and we did get pushed back out. So here again, we didn't really disturb any of the levels. We stayed above the 35 EMA and underneath this mess of resistance, which is the 4-hour 200 moving average, this down gap from Amazon earnings, and the 30-minute 200 moving average. QQQ did close up 0.22%. VXN closed pretty flat, down 0.04%, and we stayed completely within the implied move here. And then IWM. We did open IWM down, and actually I might take this to the 5-minute time frame here. On the 30-minute time frame, you could see that first 30-minute candle we just dropped, and then for the rest of the day, the 30-minute 35 EMA was our resistance, and we did end up closing underneath that level. But on the 5-minute time frame, you could see that the 5-minute 35 EMA also stayed as resistance right here. So we did drop, and we got underneath the 5-minute 200 moving average. And then when we came back up, the 35 EMA right here, resistance, and we dropped back down. And when we came back up, we just never were able to get back above the 35 EMA. So that was on the 5-minute time frame, and on the 30-minute time frame, 35 EMA was also resistance. And in IWM, we also did lose the 4-hour 200 moving average as well. We did close above that on Friday. That level goes right through here. We dropped underneath that, and we closed underneath the 4-hour 200 moving average as well. So IWM down 0.90%, biggest loss of the day. RVX closed up 2.85%, and we did stay completely within the implied move here today. And DIA, we did open over here. The first move was up right above was that resistance, and we didn't quite get into that level, but we did start moving towards the red here. We got underneath the 35 EMA, and then we did pop back up to try and hold this level, but we did lose it, and we ended up seeing that as resistance. 50-day moving average right here was also resistance. It's a little bit hard to see. I do have that right here, and it went right through the center of the trading range today. So 50-day moving average we closed under, and 30-minute 35 EMA. If you were watching Stupid Willie right here, you could see that with that opening candle, we did see red momentum here. So we did start the day off bearish right here, and we did follow through with that into the day. So DIA did close down 0.35%, and we did stay within the 30-day average volatility and definitely within the implied move for the week. So really interesting start to the week. The market didn't have an opinion on direction. We stayed relatively flat with the exception of IWM, which did take the biggest loss today. And tomorrow, when we do see PPI come out in pre-market and CPI on Wednesday, that's going to be a huge catalyst this week for which direction we take. And that was our Monday. That was our start to the week. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment if you have any questions at all, or if you just want to say hi. And if you want to help support this channel and the time that I put into it, there is a thank you button underneath the video, and that's an easy way to show appreciation for the work that goes into getting this content out to you guys. Alright then, starting in SPY, tomorrow's implied move is between 527 and 539, and that is from options. And the 30-day average volatility is a lot wider. It's about $5 wider in each direction, 522 to 545. And then on Wednesday's contract, the implied move is between 524 and 542. And to the upside, we do have a pretty solid wall of resistance. We do have the down gap from Amazon earnings, the up gap from, let's see where that goes back to. That is the rest of the gap from FOMC and CPI, PPI in June. There you go, right there. And we have been trading above that level up until just recently. And that gap was almost completely filled in here. We do just have a little bit left open, and that is part of what makes up the island top. And then the Amazon down gap is the other part. We also have that 30-minute 200 moving average going right through the top of the implied move there. The top of the implied move for tomorrow is 539. The top of the implied move on Wednesday's contract is 542. And then outside of the entire trading range, we have that 50-day moving average and the 1 hour 200 moving average as well. So really wild upside. I was really questioning that move from options at 539, but now that I see all the resistance above it, it does make a lot more sense. And then to the downside, we do have the 35 EMA. Last week, we did get back above the 35 EMA on Thursday and Friday, and then today we stayed above that level. So tomorrow, that is just underneath us. And if this level holds as support, then look up. And if not, if we break that level, then the 4 hour 200 moving average is just underneath us. We did see that last week as resistance right here and support right here. And then if we break the 4 hour 200 moving average, the bottom of the implied move for tomorrow, 527 and 524 on Wednesday's contract. And with the implied move and the 30-day average volatility being so much wider, I have been leaning into this next day strike right here. So if we do see volatility tomorrow, I'm going to be looking to these numbers right here. That is Wednesday's contract. And then just outside of the trading range tomorrow, we do have this up gap from last Wednesday going into Thursday. And it's that up gap that set us into motion that got us back above the 35 EMA. So definitely an interesting trading range for PPI tomorrow. And switching it over to SPX, the implied move over here is between, let me get a little bit closer in, 52.90 and 53.95, and that is from options. The 30-day average volatility quite a bit wider, 52.30 to 54.55, and then the implied move on Wednesday's contract, 52.65 to 54.25. To the upside, we have that same wall of resistance. We have the 30-minute 200 moving average, which has been resistance in the downtrend here. Let me zoom out to where we crossed down originally here. We did see that bearish cross down on this time frame right here. That was in mid-July, and ever since then, we have seen the 30-minute 200 moving average as a resistance. So we dropped, and when we came back up, we saw resistance right here. Then we dropped back again, swung back up, 30-minute 200 moving average was resistance. This time we had a really big drop, and then now we're swinging back up, and that 30-minute 200 moving average is right there. Definitely could be a resistance, and especially when it's paired with the two up gaps and a down gap. This is an island top. So right above that 30-minute 200 moving average, we have a huge wall of resistance. So 53.95 is the top of the implied move, 54.25 top of the implied move on Wednesday's contract. That is deep within this gap right here. And just outside of the trading range for tomorrow, at least the 30-day average volatility, we do have the 50-day moving average and the 1 hour 200 moving average. And it looks like that 1 hour 200 moving average, the momentum is down, and it looks like it may cross underneath the 50-day moving average in the next few days. That would be another bearish signal. And then to the downside, we do have that 35 EMA. We did get back above that on Thursday last week, and we have been trading near it, and we did close above that level today. If we do break it, then we do have the 4 hour 200 moving average just underneath, and 52.90 is the bottom of the implied move for tomorrow. 52.65 is the bottom of the implied move on Wednesday's contract, and just outside of the next 2 days trading range, we do have this up gap from Wednesday going into Thursday last week. That is the gap that gave us that squeeze to end the week last week, and then just underneath that we do have this dashed line right here, which if I zoom out a little bit, you could see that is a previous support level right here at 51.90. So that was right here, and we did get back above that after that big drop. So we did reclaim that support, and then we gapped up. So that is SPX. Let me just take a quick look, make sure I'm not missing anything. Doesn't look like I'm missing anything, but definitely looks like a very complicated trading range tomorrow. Personally, I'm really excited about it, but definitely be careful if you're going to be trading this. And then taking it over to QQQ. The implied move for tomorrow in QQQ is between 445 and 457, and that is from options. The 30-day average volatility is much wider, 435 to 466. And even though options are really smart and they're predicting this smaller range, anything within this 30-day average volatility is absolutely possible. And then the implied move for Wednesday's contract is between 442 and 460. And to the upside, we do have this down gap, and that was from Amazon earnings. The day after that, we gapped down, and you could see we did get into that level a little bit today and got pushed back out. So the bottom of that gap is at 453, closer to 454. Top of that gap is at 460. And then within that gap, we have the 4-hour 200 moving average right here and the 30-minute 200 moving average. And that 30-minute 200 moving average looks like it wants to cross underneath the 4-hour. That is extremely bearish. We already have these other larger time frame moving averages above the 30-minute. Getting that underneath the 4-hour is just adding another layer of bearishness, and that is right in the middle of this gap. And the top of the implied move is 457. Top of the implied move on Wednesday's contract is 460. And then to the downside, we do have the 35 EMA. If we do break that level, we have been holding on Thursday, Friday, and today. But if we break this level tomorrow with PPI, then the bottom of the implied move is at 445. And then we also have the 35 EMA. This is on the weekly time frame. I'll zoom out in just a second to show that. That's a really big level. And then this dashed line right here, that is a prior support that we did manage to reclaim. I'll zoom out for that as well in just a second. Bottom of the implied move on Wednesday's contract is 442. And then we have this up gap from last week at the bottom of the trading range. And then also the 200-day moving average is just outside of that. So momentum is all over the place. You've got the 1 hour and the 30 minutes still showing negative momentum. Then we have the 4-hour 200 moving average really flattening out. The 35 EMA, a big level, that's flattened out as well. And then the 200-day moving average still moving up. So it is possible that we could see consolidation, and this is a big range right here, but momentum is definitely conflicted. So, okay, let's go take a look at this dashed line. That goes back to right here, May 31st. We did see support there. We did get underneath that in a big way last week, but we did end up getting back above that level. So for right now, I'm keeping that there, and that was around 444. And then the 35 EMA on the weekly time frame, that is right here. And I did post that video earlier, which is why I have all these wild annotations here. Let me get rid of that. So we are currently above the weekly 35 EMA. That is a really, really important level. Since the bottom of that drawdown in 2022, so right here is the end of the year 2022, and then the first week of January 2023, once we got back above that 35 EMA, we have been in an uptrend. But this past week, we did get underneath it for the first time since right here. But then we did end up getting back above that level. And you could see that the momentum there has completely flattened out. So that 35 EMA is sideways. So watching to see if this 35 EMA does become support again and we do bounce higher, or if we break under it and start a bigger downtrend. This is an absolutely huge level, and it is just underneath us and just outside of the implied move for tomorrow, basically right around the implied move on Wednesday's contract. So that is QQQ. It looks absolutely dangerous. And taking it over to IWM, the implied move over here is between 201 and 208, and that is from options. And the 30-day average volatility is a little bit wider, 198 to 211. And then on Wednesday's contract, 199 to 210. And the first thing that pops out at me here is that every moving average that is running through this trading range, and there is a lot of them, is flat. So we have the 4-hour 200 moving average just above us. The 50-day moving average, it's pointing up just a little bit, but it's mostly flat. The 1-week 35 EMA right here is flat. And then the 1-day 200 moving average and the 1-week 200 moving average is flat. I would not be surprised if we consolidate here and carry some of that flat momentum forward here. So taking it one level at a time here, The 4-hour 200 moving average is just above us, and as well as the 35 EMA. This is on the 30-minute time frame. And then above that, we do have resistance from last week right here. That was around 207. And then above that, the top of the implied move is at 208. And then just outside of the implied move, we have the rest of that down gap from last week that didn't get filled, and that 50-day moving average that was resistance last week on Wednesday, and that is right within that gap. 210 is the top of the implied move on Wednesday's contract, and then outside of all of that, we do have a huge wall of resistance. And 211 also is up here. That is the top of the 30-day average volatility, and that 211 level, taking it out to the 5-year time frame right here. This is the 5-year chart. 211 is this red line, and it's also this green line. It was support back after the COVID era, the COVID rally right here. We were consolidating sideways, and 211 was support there. But once we got underneath it, 211 was resistance. So right here, and then we did recently get above it, and then we got back underneath it. So 211 is a really big level, and it is at the top of the trading range tomorrow and just underneath this wild looking resistance. And then to the downside, we do have the up gap from last week. This is from Wednesday going into Thursday. The 1-week 35 EMA is down there as well. That's right, cutting through the bottom of the implied move. The bottom of the implied move for tomorrow is 201. Wednesday's contract shows 199. And then we have the 1-day 200 moving average and the 1-week 200 moving average. Obviously, if we break those levels, we are in big trouble. It did catch us on that big drop. That was a huge level that caught us. And what was also interesting is that the 1-hour 200 moving average was literally crossing above the 1-week 200 moving average right there. So huge level here, and those are just underneath the trading range for tomorrow. So really wild, and I just can't get over how flat the moving averages are going through the trading range for tomorrow. It will be really interesting to see how that plays out. And then lastly, DIA. This chart looks just a little bit different because we only have weekly options over here. So the implied move on the week is between 387 and 403, and that hasn't changed since yesterday's video. And the 30-day average volatility, which is tomorrow's trading range, is between 388 and 400. And to the upside for tomorrow, we do have the 35 EMA on the 30-minute time frame. Today we did close underneath that level, and then right above that is the 50-day moving average. We did see the 50-day moving average as resistance right here last week on Wednesday. We did get above the 50-day moving average last week on Friday, but we did get pushed back down, and we did close just a little bit above that. And then today we opened above the 50-day moving average and got pushed under it. So 50-day moving average, really big level, and it is to the upside. And then above that, we do have the rest of this down gap from last week. When we had that huge down gap to start the week, we didn't close it out completely, and we do have the rest of that bear gap right here to the upside, and that is 596.5 is the bottom of the gap. And then I hope I didn't say 596, 396.5, and then the top of the gap is 397.25. So if we get above that, then we do have the 30-minute 200 moving average and the 1-hour 200 moving average at the top of the trading range. And look at this right here. The 30-minute got underneath the 1-hour 200 moving average. That is absolutely a bearish signal. So watch this level when we come back up to it as a resistance. And then to the downside, we have the 4-hour 200 moving average. The 4-hour 200 moving average, we chopped around it last week, but it didn't necessarily offer any support or resistance. So It is underneath us, and I think I even looked at the 4-hour time frame. Let's switch over there because it didn't really give us any clues as to direction here. So we are seeing the red signal line over here, but that doesn't even really necessarily give us anything to go on this time frame. So 4-hour 200 moving average, it's there. And in the past, it also didn't really give us much support. In SPY and SPX and QQQ, this level does act as a support a lot more, but in DIA, it really doesn't. So just know it's there, but it may or may not offer anything at all. And then towards the bottom of the trading range, we do have this up gap from last Wednesday. The bottom of that gap is at 397. Top of the gap is at 389. And then underneath all of it, we do have that weekly 35 EMA, which you could see to the penny was our support last Monday when we dropped. So this is one of the trading ranges of all of the ones that I went over today, probably the one that I would avoid. And I don't know why, but it just doesn't look like a lot of fun to me. But if you're trading this, good luck. At least you know what the levels that are in there are. So there you have it, guys, the trading ranges for tomorrow. I'm really looking forward to trading tomorrow because I took the day off today. Have fun tomorrow, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.